We already know what the ledger is, right? I'm talking about our nominal ledger here. So whatever you have in your income statement, you can still place them into where? Into the ledger, into the nominal. I said you stop right to that. You can still transfer them into your ledger because they might ask in the exams to transfer some items from your income statement to the nominal, to their nominal or to the appropriate nominal ledger. So what do you need to do here when you have to transfer from your income statement to the appropriate nominal ledger? Whatever you have that are credited in the income statement will become a debit in your ledger. And whatever you have that is a debit in your income statement becomes a credit in your nominal ledger. Do you understand what I'm saying here? Great. So, look at what I said. Anything appearing in the income statement must have a double entry. So, whatever we have that has appeared in this income statement must have a double entry. Because there's always a principle of double entry. For every debit entry, there must be a corresponding credit entry. And for every credit entry, there must be a corresponding debit entry. So whatever we have here must have a double entry, irrespective of what it is. All these items must have a debit entry, a double entry, either a debit or a credit. So if it is debit, it becomes totals on the debit, income statement on the credit. If it is credit, it will become income statement on the credit, on the debit, totals on the credit. So let's look at it here. Say, anything appearing in the income statement must have the double entry. Anything credited in the income statement must be debited in the appropriate ledger. That's the nominal ledger. Nominal account. And anything debited in the income statement must be credited in the appropriate ledger account, which is still the nominal ledger. So here are examples of entries that will be done in the nominal ledger after posting on the income statement are as follows. So let's take the first one I took here. Purchases account. Okay, so for purchases account, you purchase a product, right? It's a debit for you as a business. Yes or no? So, because it's a debit for you as a business, you have it as an income statement here. It's a debit on the income statement. So your income statement will become a credit because it is a debit on your income statement. Do you understand? So on the debit side of your purchases account, you have what we call total to date. This purchases. This is purchases. So it becomes on your income statement, because it's a debit on your income statement, so it becomes a credit on your purchases account. So that is why it's stating here on the credit side, because it's where on the debit side of the income statement. Is it clear? So let's take purchases returns. Purchases returns are taking it out of the business, right? So how do we open our purchases returns now? So we have our purchases returns account. Purchases returns account. Please take notes. There's a difference between your purchases account and your purchases ledger. In your purchases ledger, you have both purchases and purchases returns on your ledger. But on your account, when you're opening a nominal ledger, the returns has its own nominal ledger, the purchases has its own nominal ledger. I think it's clear.
Yes.
Great. So we open the purchases returns account now. Details, amount, date, details, amount. Six. are drawing as I'm drawing.
Yes,
So for purchases returns now, you are giving out, right? So on this side, what happens here? You have your 20x6 total. You have your income statement here now. Income statement. For how much? For the xx, right? Then here you are at your 20x6 because we don't have figures right now. So you have total to date. Is it clear? Great. So let's go down to our expenditures. We have discount received here. Discount received is an income. So what happens to the income? In your cash book, where do you put your discount receipt? Is it on the debit side or the credit side?
Debit side.
Discount received.
Discount received. Credit side.
Credit. Discount allowed, discount received. So, yeah, so what happens here? Your income statement now will be where? On the debit side. Because it's on the credit. Do you get it?
Yes.
Discount received is on the credit side. Right? So here it will be where? On the debit. So on your income statement, because on your income statement here, it is credit. Remember that? Then here it will be what? Debit income statement. Is it clear? So we have discount received. Discount received account. We have this is income statement. Then 2026 total to date.
Total to date, right?
Yes, please. So we can even, instead of putting 20x, we can just say 31st December, okay? 31st. Because it's going to be at the end of the month. At the end of the month, okay? Let's say December 31. December 31. December 31. Okay? So this one is December 31. December 31. Do you have any question about it? So your discount allowed, because discount allowed is an expenses for you. Stop writing, please. Because discount allowed, I said stop writing. Because discount allowed is an expenses for you, which is a credit. Then it comes here to become what? It will become an income, and it will be on the debit side there for you. Is it clear? So I'm not going to write discount allowed. Okay. For wages, the same. Your income statement will be on the credit side. Your total will be on the debit side. And what else do we have? I think this one is enough.
Yes.
So write this, right?
What?
What? No, it's okay. Okay, for wages. You said it already. For wages, wages is the same as this. Wages you pay out. Because you are paying out is a credit for you. But your income statement will be total here and income statement there. Is it clear?
Yes.
Yes.